Welcome back to my channel. I just wanted to do one more quick video, just basically how I trade and what I look for in the market. This one, liquidity, purely liquidity. I'm not going to say now else about anything else in this one. All that's for another video later on down the line. So I'm just going to go liquidity. I've gone back just before the massive bull run in gold, because basically if you buy gold at the minute, you're going to be in profit. It's on a huge bull run. So this is an area of consolidation in gold, and this is how you trade consolidation. It's pretty easy. So this was after, like, I'll get rid of that, don't need that. This was after a little bit of a bull run. We come into this area of consolidation, and this is why I have this on my chart, the sessions. I don't have now else. I don't really use any other indicators. I just have this because I like to see where the highs and the lows of a session are. So for example, here I want to look at this area here after the big push up. So that was London pushed up, New York carried on pushing it up, Sydney finished pushing it up, and then Tokyo is there. Right, look what happened. Right, if you were looking at this, you'd see there's the high and the low of Tokyo right there. London opened up, pushed up, swept it again, pushed down, took the low, continued down. Right, even the next day, again, look, boom, came up, swept the high, went down, took the low. It didn't just take the Asian low, it took its own London low and then pushed back up. So you could have got, if you know what liquidity is and you know how to use liquidity, you could have easily got a sell, another sell the next day, and then a buy in New York. New York came down, took the London low, pushed up, you could have got a buy there. So it's simple as that. So what is liquidity? Liquidity is buy, rest and buy orders, rest and sell orders. If you've watched anything about ICT or SMC, you'll know what liquidity is. But do you know how to use it? That's what I'm going to try and show you now. And the LUXALGO sessions indicator is really good, really good, because it shows you where the highs of a session are, where the lows of a session are, where a session starts and finishes. So I'll go into, maybe it's 5 minutes, we'll have another look at where we are. So that's where we are, right? And just show you what you can look for to be able to get into these positions. So there's the Asian Sydney high right there, and the market swept it, but it didn't really give anything to sell from. There's not really a market structure shift in there until around about here, but that's after like a double sweep. So if you were trading off purely liquidity, you could have got in a sell up here. Sometimes I'd take my sell just basically off the sweep. I don't wait for a structure shift, but you would need, like, it's a bigger stop loss than I would like to use, especially if I'm just targeting this low. But to stay in that trade and avoid the second sweep, you would have had to use around about, how many pips was that? That's around about 100 pip stop loss that you would have had to use. But you gain, if it's a 1 to 4, so you gain around about 400 pips, give or take a few. But yeah, so that's the Asian high, swept it. You could have just took a sell off there, you would have had to use a pretty big stop loss, like I said, but you would have got the move. Or if you were smart and you waited, you got the sweep, you've seen a little push down, and you mark this area as an area of interest, around about here, you could have just waited for the market to push back up. You could have got in there, or you could have just got in there. So say you were going to get in there, you put your stop loss above the high. Like I say, you would have to go pretty decent above the high. It's essentially the same setup, and target down here. Target the Asian low. That's what I like to do. I like to target from the high to the low, and you would have got that trade. If you took it from that area of interest, it would have been about a 1 to 5 risk to reward. It's pretty good. pretty good. You don't want to go for a 1-to-1 because it's hard to stay profitable. No one has a 100% win rate. No one. If you go into the next day, what we marked up on the 1 hour. So again, he's the Asian high, and it's not just a high, it's a double top. That's going to get swept. It's simple, that is going to get swept. And you've got like this area here. It's like, you could call that an order block right there. Created an imbalance and push down in a 5-minute time frame. Pretty easy to spot that. There's the low. Right. So you wait for London to open up, because Asia did just push that down, and London opened up and pushed it down too. So I wouldn't really get in a position here because it's already took out the low. So the next area I would be interested in taking a trade is up here. Once this double top has been taken, you could easily get in a trade there and target that low. So this is what liquidity is. People who are already in sell positions, where's the stop loss going to be? They're going to be in sell positions. Maybe they've took it from there, or no, maybe they've took it from there. Once they've got the move down, they're going to move the stop loss to above these two highs, the double highs. You could say that, but there's going to be rest and buy orders up there, there's rest and sell orders, you know. That's all liquidity is, sell and buy orders. Just wait for the sweep, wait for the Asian high sweep. Once Asian high is swept, there's your position. You've entered. Stop loss above, right? Did come pretty close to your stop loss, but it didn't hit it. And you would target that. You'd target that. It's a triple bottom. There's liquidity down there, 100%. People have their stop losses right below that. You could easily get in there. If you were a trader like me who waits for a market structure shift, you would have to go into like, maybe it's the 1 minute spotted here. I'm going to have to go back and find out where I was. I've lost it. Here it is. So you'd have to go into the 1 minute to find the market structure shift here. But there it is. There's your market structure shift. So this is how I would have got into this trade. After the sweep, found my market structure shift right there. I'd have marked out this area as an area of interest, just there. Just wait for your 1 minute to come back up. Take your entry from there, put your stop loss above. Like I say, you want a few pips above, just in case it does decide to come back up and take out that high. Where can you target? Where can you set your targets out? So you've got all this zone here, area, where the market is just respected and respected. That could be your easy TP1. First take profit, just partials, just to take some profit off the table and get some money in the account. Your second take profit, the next area of your next draw on liquidity, which is down here. That's a pretty easy trade, 1 to 6. Pretty averagey small stop loss. That it's nice. That is a trade I would have loved to take. I don't think I did take it, but I would love to. It's a perfect example of a setup. 1 minute time frame. You already know in the 1 hour where the liquidity is. You know in the 5 minute where the liquidity is. Now you're in the 1 minute and you've spotted the market structure shift. You've identified an area of interest, and you've took your sell. You've took your position. You've identified where you're going to take your profit off the table. Most important thing is, if you're confident in the trade and you see what you want to see, hold your positions. Don't close them early. There's no need to set break even. Well, with gold there is, because you're selling. If you're selling gold, you always want to use your break even, unless you're comfortable. But another way to take break even, I think I've explained this in my first video, is take some profit off the table at a 1 to 1. So if you took profit off the table at 1 to 1, essentially you can leave your stop loss where it is, and if it does come up and hit your stop loss, then you break even anyway. You're not losing any money. But in this case, it didn't. Once it hit that, it just went. So yeah, you could just watch it around this area. If you see it start to reject, take some profit off the table, like I say, and leave your stop loss where it is. But I'm pretty confident. If I was to take this trade, I would be pretty confident that that is going to get taken at least, and then the next one will be that. and the market even carried on going down. So if you did hold a runner, you could have got a bit more. And once you see it start to reject around this area and come back up, you could have just took your profit and you'd be done with it. But there's your day done. That would be the only trade you need in one day. And it's as simple as that, just identifying liquidity. Liquidity is key, it moves the market. That is what moves the market. As simple as that. Let's see if I can find one more example. I've just deleted my sessions off the chart. Oh my god. I'm gonna put that back on. So this is the one I use, Sessions LUXALGO. But I had at the time, because I'm in the UK, everybody thinks the US session opens at 1, it opens at 2:30. London opens at 8 o'clock. Tokyo opens at 1 o'clock. And Sydney opens at 10 o'clock. They're the times I use. So we're in the 5 minutes still. Again, it's just a sideways market at the minute. It's not really going nowhere. It's the same zones. It's just taking out liquidity left, right and centre, so you can trade this. We've got a big liquidity sweep here, so he's Asia's highs again. And there's a sweep. It's took out Asia highs, it's took out the previous day's London highs. So you could look to get in a position around about here. Now how would you find a position here? So my first thing I'm going to do is I'm going to mark out these lows. I'm going to go down into the 5 minute, see if we can spot anything that will give us confidence to get into it. So that's a little pattern I like to see. That's like a double top pattern. If you can spot this pattern, you can take a trade. So yeah, what you could have done after the sweep, it's had a push down. Mark out this area, that full candle, the one before the imbalance. Mark that full area out. But when it pushes back up into that area, just take a sell. Put your stop loss a few pips above, and target your target. That's your target. These lows, and you got it eventually. You could have easily took your profit at this area, because now we're going into the next day, and like I said, I don't like to hold trades overnight, especially not with gold. It can gap up and wipe accounts out pretty easily. You don't know what happens overnight, you don't know what happens on the weekend. I've seen it happen. So that's liquidity, that's how it's used. You've got different types of liquidity. I'll do a video on the different types, but that is the main liquidity. Drawn liquidity, where is it, where's it going to go, where's the market going to go. Yeah, I hope you enjoyed, I hope you learned a little bit about liquidity.